selected some data, but of course not all of it is from the Planning Commission. So don't pounce on me if it doesn't match with the data you see in the official records, but I've published the sources for all this data. So if you look at this first slide, we all want things not to look gloomy, but some optimism should be there. So our GDP as a contribution to the percentage of the total GDP of the world has actually grown from 1.4% to 2.3%, in the 10 years from 1990 to 2000. Of course, we are comparing this with China and US, but US is already a mature economy. But the true comparison should be with China, because they say there's a good advantage of having poor neighbors. That is, when you're not doing well in life or you have stress from home on, more demands on you, then if you have a poor neighbor, you point out to him and say you're, doing better than him. So luckily, we have that advantage. We have poor neighbors, but we shouldn't be comparing with them. We should be comparing with China. Then the numbers really don't look good. So this is the statistical representation of the same numbers which I presented on the previous slide. Okay, this is also just the trend of GDP per capita 3 years. Because for some of the, pain we suffer today, I don't think it is anything we have done yesterday so that we can fix it tomorrow. Some of the problems we face today is because of the decisions or actions we have taken, not all, but some, in the last 60 years probably. So it will take few years to reverse them. And if you look at the deficit, trade deficit, it was 2 crores in 1950, and it is, it's difficult even read those numbers, 5,40,000 crores. The exchange rate, at one time, Indian rupee was 1:1 to a US dollar, 1940. Now, if we see the trend of the rupee against the dollar, it has gone to 60 rupees. The only other currency that has constantly gone up against the dollar is the GBP. There may be some other weaker currencies like Pakistani rupee or Bangladeshi rupee, but if you look at even currencies like Thai baht or Filipinos, pesos or any of these, even Indonesian rupiah, most of these currencies, they have depreciated against the dollar when their economies were not doing well, just because the rupee is now 60. The second, it gives you a lower return. That is, if you're a foreign investor and you have to pay him back dividends, or he starts to calculate his EPS and he converts it back into his native currency like a dollar or a euro, then it is probably not going to look good. If you are a foreign investor in India, then your value of investment is already down 10, 20, all these problems are gone, because some of the problems we have are what we have built over several years, and to reverse them will probably take several years. But some of the, easier, a little more practical things, or we have to do more oil exploration, whether it is shale oil or anything else, or alternative energy forms.